Hello, welcome to European Open Briefing for Friday, October the 5th. I'm Rafi Bayajan, currency analyst at xm.com, and we're going to be having a look at what's happening in the currency markets today. The US dollar is slightly softer ahead of the highly anticipated US jobs report due later today. We already saw some strong data earlier in the week, so a strong jobs report as well could see the dollar resuming its uptrend. For the time being, the dollar index is steady around 95.75. Dollar yen, though, is marginally weaker at around 113.83. So we saw another increase in treasury yields yesterday, which rose to fresh highs. This also lifted global government bond yields as well. So all of that negatively affected equities around the world. We can see in Asia this morning only Australia closed higher, and Europe also is seeing a negative start to the day. Of particular interest are the Japanese government bond yields, which the Bank of Japan this time around didn't intervene in bond markets to keep down the yields, so that is also boosting the Japanese yen, on top of the risk of sentiment. If you look at European currencies, we can see the euro is trading slightly lower at around 1.15. So although we did see some decent data out of Germany this morning, there's still ongoing concerns about Italy's budget. There was a short-lived bounce for the euro earlier in the week when Italy announced plans to reduce its deficit after 2019, but it's still uncertain whether or not this would get approved by the EU. But there seems to be more positive progress on the Brexit front. The UK and the EU are reportedly very close to a deal, so that is helping sterling rebound from its week's lows, currently trading up by 0.14% at 1.3036. The Aussie and the Kiwi, though, are still struggling against their US counterparts. Down by around 0.3% for the Aussie and 0.2%, 0.2% for the Aussie and 0.3% for the Kiwi. Both have touched a fresh more than 2.5-year lows. We did see some stronger than expected retail sales out of Australia, but then didn't really help the Australian dollar that much. So we do have the main concern with those two currencies is the widening yield spread between US yields and Australian and New Zealand yields, which up until recently they were positive. Now the yield spread is negative and falling still. The Canadian dollar has also lost some ground against the US dollar, giving up all of its gains following that NAFTA deal earlier over the weekend, when we saw those strong gains on Monday. The main reason was yesterday that there was a big slump in oil prices. This morning, though, we can see oil prices have rebounded strongly, making up for some of yesterday's losses. Gold is fairly steady. Pound dollar in terms of the major pairs is the biggest gainer, but at the bottom, as expected, are the Aussie and the Kiwi. Let's see now what's happening to the dollar yen pair. We can see that uptrend still intact, despite the fact that we've seen some easing in the dollar yen pair over the past day. Early yesterday, the pair did reach an 11-month high of 114.54. We had that strong ISM non-manufacturing PMI in the middle of the week, as well as the ADP employment report, which pointed to a strong non-farm payrolls report when it's released later today. We also had two speeches by Fed Chair Jerome Powell, and both times he sounded very optimistic about the US economy and suggests that US rates may go up above the neutral rate. So all of that lifted US Treasury yields to fresh highs. The 2-year yield has hit 10-year highs, and the 10-year yield has reached more than 7-year highs. And this has also lifted global government bond yields as well. And that's been very bad for equities. We could potentially see sharper losses for global stocks if government bond yields around the world, mainly in the US, Japan, and in Europe, continue to rise sharply in the coming days. So a lot depends on the non-farm payrolls report, because if there is a big jump in wage growth in the US, we could see another sell-off in global bonds, and that would push up yields even higher. So let's see now what's happening to the UK pound. We can see it's crossed back above the 1.30 level, and at the moment it is touching its 50 period moving average in the 4-hour chart. So earlier in the week, also, although the pound did slide along with other major pairs against the US dollar, its losses were somewhat more limited, given the fact that Theresa May had a somewhat more successful time at her this year's Conservative Party conference, where she managed to gain the upper hand with regards to criticism from her opposition, in particular the former Foreign Secretary Boris Johnson, and she gave a very confident closing speech. And now we're seeing that the EU is warming up to Theresa May's latest proposals on resolving the Northern Irish border issue, with some Reuters reports saying that EU sources saying that the UK and the EU are very close to a deal. So at the moment, though, the impact on sterling is somewhat muted, although it is higher, because there's still a lot to discuss, which will probably come around the October summit at around October 17 to 18. So we could see sharper gains for sterling if there is a deal then. And a quick look at the Canadian dollar. The loonie did rise sharply early in the week. We can see those big gains or big drop for dollar loonie, sharp gains for the Canadian currency. That came late on Friday and early on Monday, but that initial optimism has receded slightly. We're seeing a stronger US dollar, a drop in oil prices yesterday following those reports that Saudi Arabia and Russia have privately agreed to raise output, as well as a big jump in US inventories, which although oil prices have recovered today, it has somewhat dampened the outlook for future gains in oil prices. The immediate focus, though, for the loonie is the employment report out of Canada due later today. Yesterday, there was a surprise big drop in the IV PMI. If the employment report also disappoints, that would cast doubt about a Bank of Canada rate hike later in the month. It's going to be a busy day later on with those US and Canadian jobs reports. We're also going to have a speech by Atlanta Fed President. That's it from me. Thank you very much for watching, and have a great day.